to another segment of Minute Mastery Series. I'm Adam Hodge from Holland and Hodge Capital Partners, and today we're going to review key metrics we use when underwriting and assessing if we want to lend in a particular market. This series is meant to offer insights and discuss various industry trends and topics in a few minutes or less to satisfy the short attention spans we all have today. So let's see if we can cover this pretty quickly. These are some key metrics we look at anytime we are trying to assess a local market. We typically lend in tier 1 or tier 2 markets. We will look at some tertiary markets. It really kind of depends what's happening there. So one of the first things we look at is growth, right? I want to break that down into subcategories: what's happening from a population perspective, what's happening from a job perspective, and rent, right? So is the city expanding? Is it contracting? Are people moving there? Are people leaving? What's happening with jobs, right? Are jobs being created? Are you seeing more businesses started in that city on a year, from a year-over-year perspective, or are jobs leaving? Is it a business-friendly environment, or are you seeing companies, making an exodus, leaving? What's happening from a rent perspective, right? Price per square foot, is rent going up? Is it going down? And understanding why. So these are some key growth metrics we look at. This is all public information. You can pull it from various sources. You have the Census Bureau to pull information on population. You have the Bureau of Labor Statistics if you want to pull statistics on jobs and what's happening in various local markets. Also, we look at cap rates and return on cost when we're looking at the valuation of a performing asset. So what is the current net operating income that's being thrown off of the property today? This does not take into account debt service or capital expenditures, but just simply understanding the performance of that asset. So that's taking the net operating income divided by the value of the property. Return on cost is very similar to cap rate, but understanding taking in the capital expenditure improvements, understanding what the future, not just the stabilized NOI, but the future net operating income is on that property. What's happening from a, let's say, civic or municipal standpoint? What is the general local sentiment? What is the climate, the business climate there? So is the government and the local community in support of development? And if so, what type of development? One of the easiest ways to pull this in understanding what is being developed is looking at the permits that are being issued. Understanding the key metrics for supply and demand in that particular local market. So looking at a particular asset class and saying, is there a lot of inventory? Is there a surplus or saturation, or is there a shortage? And is the demand strong enough to fill new inventory coming online, right? Demand generators is something we look at when we're looking at a city or market that we're looking to invest in. What's happening in there particularly? So where's the real estate located, right? What's the location and what's going on around it? What type of real estate is around there? What type of is there retail? Is there office? What are the various demand generators? What's happening in that local market? So this is quick back of the napkin. What we look at in every deal, assessing if that's a market that we want to be in, but it's a little more granular answer to the question, what's happening in that market and would you invest in it? So stay tuned for our next segment on Minute Mastery Series, where we're going to review the financials that we look at of a borrower and an asset when underwriting any given deal. Thank you.